Welcome to Common Sense Investing. My name is Cameron, and today I continue my journey in trying to find the next 10x stock. As always, I look forward to giving you introductions to good companies that also have the potential of being good stocks. Today I get to introduce and discuss some of the rewards and the risks of investing in Illumin. What does Illumin do? Well, they help brands and agencies plan, activate, and measure digital advertising campaigns with cutting-edge technology and advanced support services with industry-leading results. So a digital advertising company, digital advertising made easy. Illumin simplifies omni-channel advertising with transformative blah, blah, blah. I'm not going to read all this fluff. There are a lot of companies competing for this space. However, there is a lot of money in this space to compete for, right? So a lot of these digital agencies have a platform. They're all saying it's a one-stop shop for advertisers. They collect data, they provide AI intelligence, and basically you can advertise your company, your brand, whatever you want to advertise. You could do that better with Illumin, according to the company. As you can tell, it's not my favorite website. It's very fluffy. It's not my favorite company. So I'll just stop here and I'll stop you here. I mean, Cameron, this is your first video for 2025. Why are you introducing a company that's not your favorite? Well, I wouldn't introduce a company to you that I thought didn't have potential. I do think Illumin has significant potential, especially in 2025, but they have a bit of a history we need to talk about here. So I'm just going to get this out of the way and discuss some of the rewards and risk of investing in Illumin, in my opinion, but I am going to start with the risk. I'm not your financial advisor. I'm not a financial advisor, right? These videos are not a solicitation to buy, sell, or hold a stock. This is simply good discussion about some microcap stocks on the market to see if you're interested in them. Just because I might not be doesn't mean that you won't be. And I've been known to be wrong before, right? Back during COVID, the Motley Fool was telling investors over and over and over that this company was the next big thing. In the meantime, this guy, yes, I went back through some of my older presentations and pulled this slide out. I was giving them 1-star reviews at the time, saying, how long do investors wait? The second this thing turns bearish, people are going to sell because it is so heavily influenced by social media. Well, I'll take the win on this one. As you can see, share price has gone from $3, $4, $5 down to where it is now. As well as you will notice, this company used to be called AcuityAds. You remember the US banking scare in 2023? Silicon Valley Bank and some other US banks went bankrupt, causing all kinds of issues. March 11th, 2023, the then AcuityAds had $55 million in Silicon Valley Bank, 90% of the company's deposits. Investors were not happy with this at all, right? This is a big problem. They did get that resolved to their credit, or maybe just a little bit lucky, but then they changed their name from AcuityAds to Illumin, and the CEO announces his succession plan later that year. Now, the CEO retired, quote unquote retired. I believe he's in his early 50s, so fairly young for a CEO to retire. You have to wonder if investors were just upset. And to create change in the company, which it needed, they brought in a new CEO, the former CEO of Spud, which is an online grocery company, and their parent company went bankrupt or filed for creditor protection during COVID. So a weird time to be a CEO of an online grocery store. And now that CEO is working with Illumin or AcuityAds. And their previous CEO, Tal Hayek, still owns almost 7% of the shares outstanding. So I know that's a lot of negative there, right? I think this company has had a pretty tough history in the past. Share price has been going down for years now, as well as management. The new management have a lot to prove with a company that's had some battles over the past couple of years. But that's not always the final deciding factor in whether or not I want to invest in a company. I mean, generally the proof is in the numbers. It doesn't matter what the qualitative looks like. I don't like the industry sector. I've had lots of stocks that performed outstanding, and I didn't like the industry sector they were in. Management has some questions. They need to prove that they're going to be competent. Well, the only way they could do that is with their numbers. And the numbers of Illumin have been improving. They have a massive amount of cash. One of the best things that the former CEO, Tal Hayek, did was back during COVID, diluted the heck out of shareholders for a stunning amount of cash. At one point, they had over $100 billion, I think it was, and they've been buying back shares ever since share price got down to about the $2 level. So they've been buying a ton of shares. Because of that, only 56 million shares fully diluted, 64% growth from their self-service program, which is the Illumin, which is growing much higher than their operating expenses, as 23% insider ownership, although a lot of that is their former CEO, 76% retail ownership, and no institutions. So if they can attract some institutional buying, that would be substantially good for shareholders. If you remember my earlier slide back in 2022 when I was giving them 1-star reviews, I did say that if the quote-unquote rapidly growing Illumin ever starts actually rapidly growing, this stock could outperform. Well, finally in Q3 of 2024, their revenue's up 23%, their self-service revenue's up 64%, they're onboarding new clients that are higher spending customers. Their margins are still at 47%, which is pretty good, and their net revenue is increasing. So yes, this company is making some progress here. Adjusted EBITDA in Q3 was 200% higher than last year at 1.9 million. They still had a net loss. They say it was due to foreign exchange loss versus last year. So that's an inflection point they need to hit. They're still buying back a ton of shares, and they still have a ton of cash, right? 51.4 million, but they're saying they generated positive cash, so the cash has remained unchanged. So improvement, EBITDA positive, producing cash, buying back shares, net income inflection, potentially incoming here in 2025. It's not perfect, but the last quarter or two have looked better. And that's all I can say for Illumin, is that they have shown improvement. They seem to have bottomed out in 2024, both in the numbers and in their share price. And I have to wonder what's going to happen here in 2025. So yes, it's not my favorite stock, but it's improving. And I can see why people are excited about this one. They're getting better. Hopefully a lot of what they've done in the past is forgotten about. Maybe in the future they can attract some institutional buyers. That would be huge for this company. But the numbers in 2025 should see a bit of an inflection point, positive growth, profitability. That could attract some investors, and I just needed to point it out. So the first stock that I'm covering here in 2025, Illumin, good luck to them. You've been watching Common Sense Investing. My name is Cameron. As always, thank you for your time.